Something just popped out to me today, and it's a concept I've been talking about on this channel in previous videos, but it's not a concept I've dedicated a standalone video to. And it's, the concept of not staring blindly at what's the stock price right now, but also understanding the concept of market capitalization, or market cap for short. And I focus on this in other videos when I talk about shares outstanding, how many shares are issued from the company, and I look from year to year, is the amount going up or down? So I just want to reiterate today, okay? I've always heard people talk about the stock price is so high right now, don't buy. It's gone from $2 to $8, it can't possibly go any higher, a drop must come soon. But they don't look at market cap. And on the flip side, I also hear people say this stock has gone down so much right now, it has to turn around. Look, it was worth $200 before and now it's only $20. Well, I will reiterate why I don't think this is a good idea later. I also want to share a more recent event when I surfed Reddit that inspired me to make this video. I saw a Redditor talk about a stock called TSM making a due diligence for why the shares should be worth $500 to $600 a piece. Well, if we take $500 to $600 around that number, we multiply it by the amount of outstanding shares, then that means that the company would be worth more than Apple or Amazon. Is this a likely case? Well, maybe not. And also, let's make an example out of Apple to really drill this concept home before I go into the most important part of this video. Let's take Apple stock. It's trading out about $120. And let's compare it to Enphase stock, which is trading at about $170 a share. Is Enphase a more valuable company as a whole than Apple? Of course not. We see this by taking the price of Enphase stock and multiplying that by the amount of Enphase stock that's been issued, the total amount of shares outstanding. And then we find the market capitalization, or for short, market cap of the company. And this changes all the time. The company can do a new issue, issuing new shares. Usually if they're in trouble, the market don't tend to react positively to this, except for when Tesla does it, when the stock price goes up. And they could issue options, shares as compensation to executives. They could make a split so that one share turns into 4 shares. Why would they do this? Well, to make it easily tradable, to not make the share price go too high. Look at Berkshire Hathaway, they've never done splits, they're trading super high. And they can make a reverse split, such as in the case of Norwegian Air Shuttle, where they took 100 stock and merged it into one. That's to reduce the amount of shares outstanding there. So this is why I follow this in my analysis. And now we come into the most important part of this video. So if you remember one thing from this video, then let it be the next part coming. Listen extra closely now. Because if we look at smaller companies, let's take a $1 billion company, and we want to find a 10-bagger, a stock that goes up in value 10 times. It's much easier for that $1 billion company to grow into a $10 billion company than it is for a bigger company such as a 50 billion company to 10x into 500 billion. This is why we look at market cap, because when I look for that diamond in the rough and try to find an investment that I can hold on to for 15-20 years and have amazing returns on, saving a portfolio, making it go from market return to above market return, then it is those great stock picks that make the difference. And that is much easier to do on small cap companies where a lot of a lot of people don't look, frankly. You can see if you look at analyst coverage on them, that a lot of these small companies, they don't have a lot of analysts following along. Maybe they have none, maybe they have 3 or 6. And when I look at companies, I usually look at around 5 billion and smaller when I check for growth companies that I hope that I can hold on to for a long time, such as Afria or Immocell recently. So when I look at this, I look at market cap, easier growth. Okay, remember that. Don't stare blindly at share price, look at market cap as well. Market cap was share price multiplied by amount of shares outstanding. Alright, that's been it for this concept. Good luck picking your next winners. I hope you make a lot of money in 2021. Goodbye, friends.